What's up, guys? Welcome to the June Nerd Report for Jacksonville, Florida, where we go over the numbers, dive into the housing market, and how it affects you. Let's check it out. I'm Jamie Tejera, co-owner of Property Bear here in Jacksonville, Florida. This is Carrie Hustis, co-owner and sales leader. While Carrie runs all things sales, my day-to-day hunting investments and developments keeps me in two main places. In the field, checking out potential opportunities in construction, or on the computer, researching hyperlocal data. So if you're looking for insight on Jacksonville real estate, you've come to the right place. Thanks for checking out our channel, and if you like it, please be sure to subscribe. So jumping into the first thing is projects, our buy box. Our buy box hasn't changed. If you are looking to sell property to us, check out propertybear.com/sell to us. And we've got our entire buy box on there: land, multifamily, single family. As far as projects that we have coming up on the residential side, we've got the NAS Jax 3.2 coming up. We've got a big house off Fort Caroline coming, and the rehab they're working on right now is the duplex in Riverside. And I think there's also, check our Instagram or Facebook. I know that some of the coming soons are getting posted on there. As far as bigger projects with Breeze and some of that stuff. So La Villa, Johnson Commons, that one's still on the docket for later on this year. Those are going to be really cool townhomes. We're actually looking to buy one for ourselves. St. John's Forest, we've gotten a ton of questions on that. That's the housing development over in St. Johns County. It's got some workforce component to it, so affordability is a key factor there. And then we've got Ellis Road on the west side. And I actually don't have details on those floor plans yet, but if you're looking to buy on the west side under $300,000, that's kind of the projected pricing over there. So as far as news, economic news stuff, we saw that this got posted, and we generally like Bloomberg because they stick to economic news, what's going on. They've been talking about recession for the last 2 or 3 months. Again, recession does not necessarily mean a housing crisis, and for our area, I definitely don't think that you're going to see crazy price drops. So as a seller, that's great. As a buyer, that may not be great, depending on your situation. But the demand is definitely still there. So let's jump into I guess this article for a little bit. He's basically saying, it's Connor Sen with Bloomberg. He's basically talking about, wait a little bit because interest rates should drop and a bunch of inventory is going to come up on the market. And you're hearing a lot of the, news outlets talk about real estate softening. One of the CNBC real estate reporters on LinkedIn, posted about the housing market softening. Here's the thing. They're not wrong. It's just that real estate's more hyper local. So we know that this softening is happening around the country. We are trying to find a way to take advantage of that and buy some rental properties and stuff like that in other markets that are outside of Jacksonville. Because Jacksonville is still a hot market. The projections for growth are still staggeringly crazy. So, if you want to play the appreciation game, I still think Jacksonville is a great play. The surrounding, mini markets around it are too. If you're purely looking at cash flow, Jacksonville, unless you're getting a smoking deal, if you want a 10 cap, it's not here anymore. It used to be, but it's definitely not anymore. So it really depends on what your target is. So let's go into the actual data. So as far as sales price, let's break this out by county. And I'm actually going to go Clay, Duval. I'm going to add Nassau on there and St. John's. I've got all single family and new construction included. So St. John's County is at $540,000. As far as median price point, we've got Nassau County at $415,000, Clay County at 361, and Duval County at 326. And we can see that it's still climbing, month over month in each one of these markets. So again, we talked about this. I mean, we've been talking about it every month, but interest rates plus recession, right, does not mean prices will come down. I don't think that the prices are going to come down. I think that this crazy, jump in home values will slow down. It doesn't necessarily mean that it will come down. So, I'd like to see us appreciating at like 3 to 5%. That would be a lot less volatile from a housing standpoint. They're crazy two things to mix together. But even with the uncertainty of recession and all that stuff being thrown around, prices aren't coming down. And because we have a lot of inventory that we sell, we get to see what that looks like. On the new construction side, we've definitely gone from getting, in the median price point and actually below that, 326 or a little under 300. We were at a point where at the peak, I would say, before the interest rates started to climb, we would probably get 12 to 15 offers per house. And now we're under 10 offers per house. Again, it's still multiple offers on a house. So I would love to see a more balanced market. So our next thing is months of inventory. So Gary Keller has said that average supply, a balanced market is 4 months. The new normal is 4 months. The industry standard is about 6 months. We're still under 2 in every single market. Now, you can see that it is creeping up. So I've got March at 1, April at 1.2, and it looks like Duval County's still at that 1.2. So Clay County, smaller market as far as like quantity of homes, right? 1.5 to 1.6, I think. It's not letting me track that right there. But you can see clearly that those numbers are going up. Let's see if I can zoom in. So there is more inventory on the market. Again, I'm looking at something like, somewhere between this blue line being our balanced market. We're so far under that from an inventory standpoint. It's crazy. We're actually working on a deal with a national builder, and they still are trying to make up a gap of homes. From their standpoint, even with all the competition from a national standpoint and local standpoint, they're still looking at this like it doesn't matter. We still have a massive shortage of homes, and that those calculations were made before all these people started moving to Jacksonville. And it's not just Jacksonville, it's St. John's, Nassau, Duval County, and Clay County that is seeing a big influx of new residents, new home buyers. So even with rising interest rates, they're still saying we're not building fast enough and we're not building enough. So they're still looking for more and more projects. So that's a good sign. Let's jump into closed sales. So number of closed sales did dip month over month, and it's dipped in the past 2 months. I'm still attributing that to Nassau County. It went up by 6. 351 to 300, 643 to 561, and then 1572 to 1450. I'm attributing this to inventory. When you have a month of inventory, you don't have a lot of houses. So again, when things sell, it jacks that number up. And I mean, look at this. It only takes to knock this up, a percentage point up or down. It only takes 100 homes. And I know that from on the new construction standpoint, I mean, here it's even less, but on the new construction standpoint, we're behind on how many of these we're able to get out to the market. And it's not a demand problem. The demand is definitely there. It's a construction, supply chain, all of that stuff that's slowing all this stuff down. And it's not like all these homes are going to come on the market all at the same time, because everything's kind of in that same, tightening type of train or pattern. All right, let's jump to affordability. This is where we kind of shine from a you know, inventory standpoint, we like to focus on affordability and what those numbers look like. You can see that affordability is definitely going down. This is an index, we talk about it every month. It's based on interest rates, average income, or median income, home prices, and it's all kind of mixed together to come up with this index. A score of 100 is saying that it's affordable. So you can see that St. Johns County was essentially affordable, in November of 2020, and then since then it's basically dropped down, and so have pretty much everything else has too. Duval County looks like it's just under the affordability level. However, if you're talking about relative affordability, right? And I know that this is median family income and stuff like that. If you are looking at people that are coming in from other states, Jacksonville, Duval County, St. Johns County, it's all significantly more affordable than what some of these other markets are looking like. The other thing is that even with that article from Bloomberg that we were talking about earlier, Jacksonville's insulated in a specific way because we know that the hedge funds are here. We work with them, and they're not going anywhere. They're trying to buy more houses. They're happy with the yields where they're at. And they'd get more competitive if needed. If prices did come down, they would just get more aggressive. So the hedge funds create that insulation for us. But not only that, let's say we didn't have the hedge funds, from an affordability standpoint relative to other states, again, we're very affordable. So, and I'm not saying, we're affordable and it's not apples to apples. So if you have someone moving from New York to Jacksonville, Florida, don't even take, Manhattan in the city, like just go right outside of that. You're not going to get, the size of house up there, for $500,000 that you get down here, right? So, we even see this in like the luxury range where like $1 million, up north or in California is middle market, and where here it's considered luxury. That's kind of the big difference, right? And it's effective in almost every single market. So let's jump into mortgage rates. So we've got it set up at $300,000, 20% down payment with a 740, 760 credit score. You can see that they are, I only like looking at the 30-year fixed. You will hear about people talking about these ARMs coming back in popularity. There is a kind of like the division of realtors. There's a division of mortgage bankers and brokers, and they put out numbers based on how many refis are up and how many ARMs and how many all these applications are being done. And the number of ARMs that are being processed or applied for or whatever has gone up. So that's interesting, right? The thing I've heard, though, is that today's ARM qualification requires that you are able to meet the payment post-teaser rate, too. So it's not like you get the teaser rate today, approval, and then you get surprised later. Like you have to qualify for both up front, which is great. It kind of prevents that 2008, 9, 10 situation again. But you can see that mortgage rates did dip a little bit. March to April, they were creeping up. April, where was our little peak there? End of April, start of May, and then by the end of May, they had come down a little bit. Again, these interest rates are directly affected by the rates that the Fed is putting out. The Fed's whole mission right now is to, the tool of interest rates is to curb demand. Again, in the real estate market, we do not have a demand problem, a demand-driven problem. We have a supply-driven problem. Is the Fed accomplishing their goal as far as curbing demand issues? Yes, in other asset types and domains, right? Like you're seeing even in the stock market, tech stocks are dropping because these companies don't make any money. And it's easy to bet on companies that don't make money if your leverage is really low. But when your leverage goes up, you don't want to invest in these companies anymore because they don't actually make any money, right? You saw that with Carvana, you're seeing it with Compass. So making money actually matters now. But from a real estate standpoint, it's not so much a demand problem as it is a supply problem. So it's not you can see it in prices, it's not really affecting it. And yes, more inventory is coming on the market. I think that that's largely attributable to kind of what news is putting out there. People are panicking a little bit, but you want to find a way to use that to your advantage. On our end, we are selling, certain things in Jacksonville, Florida, to go look at, to kind of have a bucket ready, right, for certain opportunities that might come up in some other markets. Because we do think the era of cheap money is over, obviously, with these interest rates. And I think that's going to create some opportunity, because I do think, a 3-month jump in interest rates, they basically doubled in 3 months, is going to expose a lot of people that bought some properties at really low cap rates, thinking that it was going to last forever. And now when it's time to refi that big debt, they might not be in a position, where they can keep it. So that's kind of what we're looking for from an opportunity investment standpoint. But if you have any questions, if you're what does all this stuff mean, right? If you're a seller, I wouldn't panic about anything. If you're selling and looking to buy, I would say, this year, I would say you're still looking good no matter what point you decide to list. I think a lot of times the listing part of the house is dependent on, can I find a place to live? I do think the inventory is going to creep up a little bit. So if your concern was not having anywhere to go, I think that inventory is going to start showing up. I would be happy to see inventory double, and I still wouldn't panic. Now, if inventory doubled today, we'd be at 3 months of inventory. The news would post that inventory has doubled and the market's crashing, when in fact we haven't even reached a balanced market. We would still mathematically be in a seller's market, which is crazy. And so if you're a buyer, if you're looking to buy, yes, interest rates, tripled since the end, since the start of the year. But inventory should be creeping up a little bit to give you, some more options. I don't think for our market, for Jacksonville, you're going to not have multiple offers this year. I think that you're going to be competing. Now, some sellers that have overpriced their homes, you're going to see some more price reductions, because there have been some listings that have sold that probably shouldn't have sold, purely based on a supply issue. But I think, that whole cheap money thing kind of affects those overpriced listings. But if you have something well priced, it's going to go into multiple offers no matter what. And I think that for the next year. So retail buyer, commercial, land, if we can help you with that, or if you have something to sell to us, we're very hungry right now. Single family renovations are opening up. Our crews are opening up so we can buy some more. Land, definitely looking for land, 8 acres plus, and then that commercial, we're looking for that. As far as a team standpoint, we are looking to add 1 agent. If anybody knows anyone, we're not really going to go hunting for them. But if it happens organically, we're super happy with that. So yeah, that's the Nerd Report and market update for Jacksonville for June. And if you have any questions, you know where to find us. Thanks for checking us out.